This is their main feature tonight. I feel like I've gone and talked about a lot of stuff tonight already, and hopefully you found it useful, but this is the main feature of tonight. Administration for any property investors, make sure that you keep a separate bank account for your property business. If HMRC ever go into an inquiry with you, they will look into your bank accounts, and therefore you do not want to be mixing up your personal and property related transactions. Make sure you keep separate bank accounts for that. You do need to keep receipts for 6 years. Now, people are moving on toward, using Xero or QuickBooks. My concern that a lot of people are now doing is uploading their receipts onto electronic devices. My issue with that is if they haven't got a backup facility, which they keep on Dropbox or some other device, OneDrive or things like that, and they're using Xero, QuickBooks or whatever, if their license or that company goes bust, then all of that data that you've uploaded will be lost as well. So please don't just go with electronic. Make sure you have a physical or a secondary system to back your data up, just in case HMRC do ever investigate you and want to see these receipts. All associated costs with your property business should be allowable, and I'm going to go through that in more detail with you. I would say the critical thing I'm always saying to clients, and it's absolutely commonplace for clients to say, well, I haven't got invoices for these transactions. Now, guys, unfortunately, if HMRC do not see invoices or receipts from you for transactions that you put in your bookkeeping, they will not allow it, and they will take it back out of your tax returns and then charge you the tax that they think is appropriate. So if you don't have receipts, make sure you go back to your builders, back to your suppliers and get them, because if you get investigated, no receipts equals no tax relief, and therefore you could be heading into trouble. Your invoices pretty much should have a description as well for the activity. So if you've got a builder, then make sure they itemize everything that they do, and I'm going to describe to you the kind of narrative that you might want to put onto your invoices. And last but not least, make sure that you pay the invoices the same amount. So when you are doing your bank rec, you know that you've got your invoice paid, and that should be easy for administration purposes. If you've got if you've got a car or a bicycle, please note down here. I always find this fascinating. If you've got a car, which most people do, cars and vans, which is in your personal name, you can charge your limited company or your property business in your own name 45p per mile. So things like attending courses, networking events, seeing a letting agent, seeing estate agents, seeing tenants, all of those things will mean that you have got to get into your car or into your van, and you will incur mileage. You can charge your property business 45p per mile for the first 10,000 miles, which is then reduced to 25p per mile thereafter, after the 10,000 miles. Please do note though, for those guys that are into fitness and wish to keep in shape, then you can get an allowance of 20p per mile for riding your bike. Who would have thought that HMRC would be a great advocate for health and fitness, but clearly they are. 20 pence per mile. I don't think it even costs that much to run a bicycle, does it, compared to a car? Half the price? Don't think so. Now, please do note on the bottom here, though, and this is in small print on HMRC's website, we talked about 45p per mile, but if you've got a passenger with you in your property business, so it could be your employee, it could be your joint venture partner, it could be anyone that you're going to be working with, then you can have an extra 5p per mile. So it could be 50p per mile rather than 45p. And the way I tend to do this, I used to use a spreadsheet, which basically itemized all the things I do to offset, in terms of adding up my mileage over a period of time. And I would say I went to this place in this city and I journeyed from this place. And I would work out how many passengers I had in my car at the time. So sometimes I had just me, but then I might have two or three people with me. So it's 5p per mile for every passenger. So sometimes my mile rate was be 60p per mile, not 45. And as a result of that, my expenses would be quite high over a period of time. So make sure that you do record this. Again, HMRC are sticklers for detail. So do not say, I've just done 10,000 miles. We do unfortunately have clients that will say, well, just put in 8,000 miles and I'll make it up when HMRC investigate me. That's not really the best practice. If you know that you're going to be doing journeys, make sure you document it somewhere. Don't just kind of go, I'll make it up when I come, around to it. They would just take that cost out straight away. If they sniff that there's around 8,000 miles, then they won't be generous. They will not be saying, well, please tell me what the 8,000 miles is. They would say, well, we don't believe you, and we'll just take it out. And then you're going to be scratching around trying to come up with mileage figures to come close to that 8,000 miles, which you probably won't be able to do, or are believable from HMRC's perspective. Here's a great allowable cost. So whenever I'm going through a property, the first things that I'm going through in my mind is trying to repeat these words on the screen here: repair, replace, renew. And the reason why I've got it in this shade is that it's come from HMRC, by the way. It's not my words. Who would have thought HMRC were marketing people? The 3 R's. But ultimately, what I would be doing is going around a property, and I would be looking at repairing some brickwork, or if there's some cabinetry that I need to mend, then I know that would be 100% allowable to offset against my income. If I'm replacing carpets, curtains, if I'm replacing bathroom suites, then that will also be 100% allowable to offset against my income. And if I'm renewing, so if I'm doing paint work, redecoration, replastering, then again, I know that that is 100% cost allowable against my property income. And as a result of that, for many, many decades, crikey, no, I don't want to exaggerate here. For the last 14 years, I've been very tax efficient with my property income. Not so much in the last 3 years, unfortunately, because I'm not doing big refurbs anymore. But it was a way to be tax efficient by using these 3 REs, so repair, replace, renew. And the good practice really is to go through the property and just keep doing this in your head and just saying, if I'm going to replace this, I'm going to replace that. Oh yeah, Simon said that I could have that against my income. And that's probably a good reminder. Now, as Optimize Accountants clients, you're in safe hands, because if you have an upgrade from single glazed windows, or upgrade your fuse box or your boiler, we will know that these costs are allowed. Most accountants do get this wrong and they exclude it out of your tax return. But because we're in the game, we know what we're doing here, then we will be, of course, allowing these costs to be offset against your property income. For you, it's beneficial because if you've got HMOs, for instance, then your insulation, your heating costs will be kept down if you upgrade your property. This is a quick example of what's allowed. So this is a 1970s wooden kitchen, if you will. And unfortunately, I've gone with a 1980s refurb. So it's basically a like-for-like replacement. You can see that the kitchens are relatively similar in size. The same number of cabinets going on here. There's a cooker, a wash basin, etc. Because it's like-for-like replacements, then it will be 100% allowable to offset against your property income. However, this is not allowable. So this is whereby you've got your 1970s kitchen here, and you've upgraded it to kind of a 23rd century kitchen, if you will. This is where you have a HMO kitchen. So you've got now a big American kitchen, big American fridge freezer there. They've extended the kitchen now into the garden, so it's twice, or not 3 times bigger. They've got underfloor heating now to make it really swish, and some fancy lights going all over the place. Now, this is not a like-for-like replacement, and as such, this will be a capital cost in nature. Now, don't fear, because just because you can't offset this cost against your property income does not mean you do not get tax relief in the future. Of course you do. You get tax relief when you sell the property. So it will become a capital cost, and it will help you to reduce your capital gains tax when you dispose of the property. Now, many of you listening to me on here will be saying, well, I'm not looking to ever sell properties, so therefore I have lost out. And I can understand that point of view, but unfortunately, HMRC are very strict in terms of saying, well, is it a like-for-like replacement? And if it is, that's allowed. If it's not a direct replacement, then it's going to be capital in nature. And these are the other kind of costs that won't be allowed. So if you're doing kitchenettes in kitchenettes in bedrooms, or if you've got bigger kitchen suites going on, so instead of 4 cabinets, you now put in 8, then those won't be allowed. It will all be capital. And indeed, if you mentioned extensions, so if you're building extra bedrooms, maybe a new living room or living accommodation space, then those costs again will be capital in nature. They will not be allowed to be offset against your property income. I can't possibly leave this webinar without talking about capital allowances. I'm sure that people will be saying, what about capital allowances? As soon as I finish the webinar. Well, I didn't want that to happen. So here's capital allowances. Now, capital allowances are items that's in the property. So if you take your property and then you look at the items that are non-bricks and mortar, so such items will be your furniture, it will be your lighting systems, your heating systems, it will be the furniture as in the bathroom suites and kitchen suites. All of those items will be capital allowances claims. Now, I would say capital allowances are only really useful nowadays for holiday lets and service accommodation. Years ago, I would say you could get very, very good capital allowances on HMOs. I don't think you can get those as much nowadays. I know there's some sharks out there trying to sell those. But since 2013 and 2016, HMRC pretty much said, well, HMOs is not really a commercial property, and therefore getting capital allowances on those are a little bit dodgy. So do be a bit careful with your capital allowance claims from 2016 and beyond. But if you've got commercial properties, holiday lets, service accommodation, you name it, then you can get good capital allowances rates. What will happen is that someone, we recommend a company called 6 Forward. So again, 6 Forward. And what they would do is they would do a report for you to look at all the items that you cannot see, not just the items you can see, but the things you cannot see. So the wiring, the plumbing, as I said earlier. And they will put together a report to you and say, these are the capital allowances that you can claim. And if you're lucky, and I've got HMO here, but this is just an example. If you had a profit brought forward of 9,500, but you had a capital allowances claim of £20,000, you've now got a loss on your property income of 10,500. The magical thing about capital allowances, though, is that 10,500 could be offset against your other forms of taxable income, such as your employment income. So 10,500 could be offset against your employment income, which means that HMRC give you a check back for the tax that you've overpaid. So that's a great way of reducing tax, but also getting one over HMRC and getting some money back from them. And again, I can't overstress the importance of VAT either, because there's so many people that do not look at the VAT rates on their refurbishment and pay the full amount of 20%. And we all must kind of stop and think about VAT when we're making purchases, doing some refurb projects. If you are building houses to sell, then there is a 0% VAT, so you don't have to pay VAT at all. If you're doing commercial to residential conversions, then again, the VAT on the materials and the labor is reduced from 20% to 5%, provided, in fact, I'll go through the provided in a second, so just hold your horses here. You can also get a reduction of VAT from 20% to 5% for properties that have been empty for 2+ years. You will need proof from local authority to say that this property has been empty for 2 years, but examples of this will be probate properties. So if you're buying probate properties, typically it will be empty for a period of time, and therefore you get proof. any refurb projects you can get on there, VAT is reduced from 20% to 5%, which is great, right? And lastly, you've got the 5% for resi, so normal single-let dwellings into HMO conversions also gets a reduction from 20% down to 5%. Now, the one big thing I just flicked on, I need to go back. The one thing to note here is that your tradespeople do need to buy and fit the materials. They need to buy and fit the materials. They need to be VAT registered. What would happen is that they would buy the materials for you for your kitchen, let's say from Howdens or something like that, Magnet, and they would claim the VAT back on their on their VAT return, and they would give you a invoice with a 5% charge for materials and labor. So please note, they will need to make sure that they get the VAT recovery through their normal VAT return, and you will be charged 5% in some of these cases as outlined on this slide. Now, on that side of things, you are not going to be able to be VAT registered. You cannot claim a reduction from 20% to 5% on commercial to residential conversions. You cannot claim 20% to 5% on properties that have been empty for 2 years. You cannot claim 20% to 5% on HMO conversions. It's not as though you can reclaim VAT from HMRC. It's just the fact that you are charged from your VATable tradesperson 5% VAT. Okay? Hopefully, I've got that across.